This is better. Okay. Are we ready? Ready to kickstart?
Yes, sir.
All right,
Yep,
all right.
ready.
So I'm really interested because today I want to start a little bit differently. We're going to talk about setup. That's what this session is about. But what I'm interested to see and hear from uh, hopefully both of you is was there a trade in this last few days that you at least knew it was there and whether you took it or not? And I want you to tell me where that trade is.
Yeah, I didn't. I guess I can start. I didn't take any trades. It was just the moves were happening very quickly, and it was a very volatile week. I wasn't able to carve out the time needed, but reflecting, yeah, they're reflecting back on the week. There was one or two moves that I think provided an opportunity that we could have taken advantage of, especially in the Qs that kind of fit some of our criterias. Um, so yeah, we definitely can talk about them, but unfortunately, no, I didn't take any trades.
Yep.
Yeah, I also have not taken any trades the past 2 days. I'm trying to keep like Friday as like dedicated time because I have less meetings and have that as a starting point to at least like practice taking trades. But no, I have not taken any trades.
Okay. So man, you said you saw at least one or two trades in here. So walk me through what you see based on the cues on the screen right now.
Yeah, I think the best opportunity that I found was what was that on the 25th. You can see kind of we had a plan to say, hey, like there's that demand zone. Depending on what happens once we retrace back to that demand zone, there could be an opportunity there. Kind of what we saw is it tested that demand zone. It didn't close it on the way. It it went up, then it came back again and used that demand zone as support. And then the next day it opened, like a gapped up much higher. So that could have been an opportunity right there.
So where would you
Considering that
take the
you,
entry? So before you answer that question, to me this is a gap, not a demand, because the demand zone was down here.
or
This was
yeah, I meant
a gap.
using the as support. Yeah,
Okay.
yeah.
Okay. Cool.
Sorry.
So where would you have taken an entry if you were watching the
Um,
market?
yeah, I would have taken. Um, Ideally, there's two places you can take it. Um, Depending on your confidence level, you could take it as soon as it broke the second or the first when it closed that gap. So if you can see right there on the right there, yeah, it gapped up the next day, right? And it opened up. And then it came back down, closed that gap, and then started reversing. And as soon as it broke that, closed that gap and broke above it, you could enter right there. That's one opportunity.
So
If
I want to talk about those. I want to talk about those because we really have to make it like tradable discussion, right? So here first, let's keep in mind like uh broader view, right? I think we always have to start with that. So we did say last week Tuesday, so this rise move down is when we discussed last week Tuesday. Unfortunately, it was not recorded, but that's the day. So we have in a bigger downtrend, we have a recent uptrend. So you can take either side of the trade is not a reversal, right? So if you take to the downside, you have that downward bias, so you're playing in that direction. If you want to take it to the upside, because the most recent is this upside until we clear the 78.6, that's also an acceptable move. So from that perspective, if you say I'm going to take it to the upside, completely acceptable. Just keep in mind this supply zone, we never closed it, right? By never closed it means we didn't go above, tested it as support and reverse, right? So that hasn't happened when we are talking about here. When we are here, that hasn't yet happened, right? Even today, that hasn't happened. But just
Yeah.
as a point of reference, that hasn't yet happened. Now, in addition to that, when you say if I close this second gap, I came down, tested this gap, I gapped up, created another gap, and I closed this gap, but I didn't keep going down. I don't know that. Why do I say I don't know that? This is the day, the very next day, the Wednesday, it closed the full gap at the end of the trading day. So now you don't know what's going to happen. And when you do your analysis Wednesday night, again, when you do it here, when at the end of Wednesday, you don't know which way this is going, right? Potentially, this gap is not closed; it wants to go down, or it's a higher low, which you see here, and it wants to go up. So you really have to have that clear vision when you take that position, because the only time you can take the position is the next day, right? Right. When you say down here, it closed the gap, and I'm going to take a trade based on what? Right? There's no hammer, there's no railroad tracks, engulfing. Nothing has happened, and you don't know until this gap up. At this gap up, you can take a risk and say, look, I made a higher low. Let me take this trade. Right? So, uh, again, it's. I want to mention this because, like, when you have hindsight, you make comments with that knowledge of hindsight. You have to eliminate the hindsight when you say, I could have taken this trade. Why? That's why I always say, go to replay and don't see it. Right? Don't see it. And then your conversation is based on, hey, if I was taking a trade here, what would I do? Right now, like if this was right now, there's no trade because this gap could close or this could be a higher low and it wants to open. And if it wants to open and say, okay, this I'm gonna treat this almost like a hammer, and if it opens up here a penny above, I'm going to take a trade. That's valid. But what happened is instead of giving you a penny above, it really gapped up. So when this gapped up, yeah, go ahead.
I was gonna say, even if you saw a hammer right there,
Yeah,
you still wouldn't trade it, right? Until you see the confirmation opening higher the next day,
yeah,
right? Like let's
exactly,
assume. Is that the case? Okay.
exactly. I want to go a penny above my hammer for my entry, right? So that's ideally that's what I want to see. Sometimes you can get very confident in your directional bias, and you can say, I see the hammer forming, right? The hammer hasn't closed, right? Because if it has closed, then that penny above you see it already. So as the hammer is forming, you can say, I'm very confident on my directional bias. Let me take a chance at this trade, and then you tighten your stop or you uh, minimize your position size. But otherwise, like for me, I want to get all the confirmations. But there are some nice things that are happening in this whole move. Like we have the 23.6% retracement, right? That's an area of value. You all know green to green is my preference, but it's still valid somewhere in here. It came and touched this gap, right? It makes it very, very valid. And so you can say, as soon as it opens up here, let me uh, take a trade. Now this demand zone, it blew right through it, right? So that demand zone doesn't concern us anymore. So when it created this gap up, right? So if you see it like at the opening of the day, 6:30 in the morning, this is where you see the gap because that low tick hasn't formed yet, right? This is where it opened. So if you look at this gap and say, hey, what does this gap do? It it appears like it went down, or you say, oh, okay, if it comes down here, this is my buying zone, right? That's how you're processing, but that doesn't happen. And so then that hour, when that hour ends, you see that it wants to go up, right? That's what it wants to give you. So there's two places where you can take this entry, right? This is really what I wanted to hear from you, like higher low, area of value, this gap up. I either take it at this open if I feel confident. Usually I don't, because we have seen gap up and boom, it collapses, right? We have seen that many times, like up and then it collapses. So we've seen that many times. So this is one area where you say maybe it's a higher low, I'm taking it, or you wait for this bar to close and then you take that trade from here. So if you do that, my suggestion is always I say, what is a logical place for a stop? Right? What's a logical place for a stop? So if we want to take this trade to the upside, like a long position, one logical place for a stop is down here, but that's very far away for me. This is very far away. You can always take far away. So instead of 100 shares, you can do 10 shares. You can do 5 shares, right? But that's a lot of distance, and to get to my 2, like I'm going outside of the screen boundary. I don't like that. So because of this gap, for me, I would consider this halfway as my stop area. Or you can even say, you know what, I even want to make it tighter. If this bar low doesn't hold, I want out very quickly. So you risk this small amount. Now you can say, hey, where's my 2? And my 2 roughly here, right? And you got it that the next day, that Friday. At the open of Friday, it shot up. So this is really what I want you to see, like when you're looking at big pictures. These are potential trades that we really love to see, because it's a zigzag play, right? Area of value, we have a zigzag play, right? The basics, even the basics. Of course, we don't have a hammer, but if you want to take a trade, you can say this is almost a hammer, but I'm gapping up. I'm gonna take this gap up. So to close then on the, yeah, go ahead.
I was gonna say, so ideally you would have taken a trade on that gap up in the morning after you see that gap up, based on treating the last close as like a hammer, and then you would
Yes,
have. Is that like the ideal
but this is where I would take the
situation?
trade. I want this bar to close before I take the trade.
Okay, and
The
then where
reason,
would your
the
stop
reason,
loss be?
so I'll do it again. So this is my entry. My stop is either at the bottom of this bar or at the halfway of the gap,
Okay.
right? That, and then I would get that Friday. I get my uh, if I push this up here, I get a better exit here on Friday.
Yeah, it's a lot of
Because
points too. It's like,
but
yeah,
it's a good move, right? It's a good move. I, I
yeah,
I was thinking, okay, if it wants to close this gap because that's what it's been doing recently, right? That's the experience that it's giving us. Is it gaps up, it collapses. It gaps down, it collapses. That's what it's been doing recently. But the day before, it gapped up. It wanted to collapse, but it didn't, because
yeah.
it just closed that gap, and then the next day it went up again. So then we say, okay, I want to take this trade. Do I take it right at the open? It's a bit risky, but you could, or you wait for that bar to close.
Right.
And the reason why on the initial stop, when I said, hey, this is a very logical stop, is here, I still have this supply zone up here. This out of the supply zone, tested as support and up, has not happened. Until that has happened, I I'm not taking trade to the downside because of supply zone, because we've done that multiple times already. That's not my interest. But my interest of keeping the supply zone is I want this to happen. I want to see this. I'm not seeing this yet. Right? So that's why I keep this supply zone in the picture. Not to take a trade against it, but I keep it in the picture. Because in the in the big picture, in this big downtrend, an uptrend, this downtrend has not yet completely reversed because now this dotted line, the 78.6, just so as we zoom in closely, that 78.6, it tried, it closed above it and it comes back down. It closed above it, comes back down. Close above it, comes back down. Close above it, aha. Now we haven't come back down yet. So this is key now for us, right? We know even if we remove the supply zone, I want this 78.6 to hold as support. Now I'm saying this big picture down move is no longer there. Right? It's an up move momentarily because we still have this bigger picture up here. Right? We still have this supply zone here. There's still a lot of things on the way. One, there's still uh, macroeconomics that we have to look at. Uh, Tomorrow is FOMC, right? So what are they going to do? Are they going to raise rates? More and more banks seems to be failing. Are they going to raise rates? Do they want to lower rate? If they lower rate, I think the market is going to act crazy. If they raise more than 25 basis points, I think the market will also act crazy. If they hold still, I don't know what's going to happen. But to me, when they hold still, they're saying we're afraid, and market doesn't like to hear we're afraid from FOMC. Right? They want to hear like a very strong decision, one way or another. Right? Just tell me what we're doing. Are we going down? Are we going up? Just tell me. Don't tell me indecision, like, and show fear. So all of that we have to put in the picture, right? So that's so let me go back to my 1 hour chart. So this was really the big trade here. It was really a big trade. Big picture, a downtrend bias, like we keep closing above the 78.6, right? Because you can see it. We keep closing above, down, tried and keep going down. So the second trade, a bit more risky, but again, if you put a tight stop, is this hammer here, inverted hammer. So you could take that trade. Very tight stop. This one, definitely a tight stop because we're seeing the uptrend, the momentum on the uptrend is strong. Even though we are not completely out of the woods, we still have a strong uptrend momentum. So when we see that, very tight stop, right? Very, very extremely tight stop right above this inverted hammer. I want to be out. And then where do I get my two? Very quickly. I'm going to get my two very, very quickly. Right? You can keep this position open, like 50% off the table. But when you keep a position open like this, I'm going to add another trade here because this doesn't like stops. So when you get out here, and here was your entry, your next position you have to treat it like this. Like my entry, slightly below my entry is my stop. This is how you have to treat it. So you have to move your stop. So I can't move this stop below my entry, right? It just doesn't let me. The drawing tool is just not made that way. That's why I'm just drawing it for you here. Like your next stop has to be below your entry because your total position has to be positive. You've already doubled on half the position. If the other half is break even, you're a quarter ahead, right? So that's why you put it slightly below your entry, and then you just let it keep riding, right? And so now you can see how far did it go. It went as far as 3 and 3 and an eighth. Of course, you never know, right? You never know where you want to take your exit, so you have to start taking exits step by step. Maybe you target, hey, it could be 78.6 could hold as support, so that should be your final target. If it reaches here, I'm exiting all my positions. So halfway in between, you're exiting some of your positions, right? Because we have a strong upward bias, right? It's not like, hey, I want to close this gap. Let me take it all the way down here. It might work, but I don't like that it might work and let me give back the money that I've made. Right? I like to keep, moving my stops lower and lower and exiting along the way. Right? It's all about the learning here. It's not about, making 1,000% one go. You keep adding those small amounts every day. That's a good position. So these are the two things that I really wanted us to cover, like as far as what were potential entries this week. Spy and Qs, they did similar moves, so no need to talk about same things over and over. Now this is still valid for me. Like, we can shift it here. It's still valid. It hasn't happened yet. I want to see this. This one, I can remove it. This one I can remove it because right now, what are we expecting on the downside? So we're going to the downside. What I would like to see, I want to see a small pop up, and then we target this demand zone. Right? Again, those are some things that I would like to see to the downside. Sometimes, like what we talk about today, something completely different happens. We just have to be nimble and take those positions, right, accordingly. But this is really what I see for this coming week. If we pop up slightly, we take it to the downside. If we get like an inverted hammer, or we completely come back here because we use that. So in the spies, we also have to keep in mind we haven't cleared the 78.6 yet, right? So making this happen, this is going to happen when we completely clear that 78.6, because it really lines up with the supply zone. Right? In the Qs, we've cleared it many times. We're above it now, so this is fantastic. We're above it, and what I would like to see, we didn't get a nice hammer, right? We have a big bar to the downside, and we kept slowly retracing that. So maybe again, if we push slightly higher and come back and close this gap, this is what I would like to see. And this is still valid. This hasn't happened yet. But if you don't get an inverted hammer here, this could be that 78.6 is holding. Could be a strong support, and it's going to give us this next one. So we don't force trades. We just do what the chart tells us. Questions?
Can we go back on the spies real quick?
Sure.
So you think it's gonna blow past your gap right there completely?
This gap here?
Yeah.
Oh, I don't know. I'm just saying this is what I would really love it to go, right? This is what I would really love as my target, because that's a very nice move. Right? That's $12 move, right? It's very nice move. But if at the gap it stops and it gives us some sort of a hammer or anything like that that says, hey, I'm done, I don't want to reverse this anymore, then we exit the trade accordingly. Plus, depending on where we enter, we should have exited some position anyway.
Yeah.
Right? So where is the logical stop in this instance? The logical stop is up here, right? There's no gap down or anything that tells us logical stop. Maybe we get a hammer and we'd say, okay, I want to make that hammer my stop somewhere here. So, then my first exit is right around this gap. It's slightly above this gap, but that's my first exit. As soon as I hit my first exit, I'm a happy camper because I have received enough reward to be able to completely close this trade and be happy with it. Right? So if it wants to keep going down here, even better.
Yeah.
Yeah. But I want to remind you, do not set a stop just because it makes your risk small. It has to be a logical place. Right? Could the stock move there and reverse, or once it gets there, it means it's done, right? So this recent high, if it wants to make a new higher high, that's when I'm saying, hey, this move is done, right? I'm wrong to the downside. It wants to make a new higher high, I'm out. If it's making a lower high and it gives me a hammer and say I want to use this lower high as my out, again, you've made that conscious decision, not because the stop risk is small, just because you say, hey, I have a nice inverted hammer, especially if the wick is long. You say this strong bearish momentum here, I'll use that wick as my stop. Right? So just make it logical like that.
What's your take on the hammer that we see at the last close?
So for me, this is insignificant. I'll tell you why. I want to see my hammer at the area of value. So when I want to see it terminate that pullback or that rally, whichever direction I want to go. So I want to see it down here, not up here in the middle of the trade. Again, I'm talking about from personal preference, right? There's no perfect science to it. That's one thing why this is insignificant to me. The second thing is the wick of that hammer. When I look to the left, I want to see empty space. I don't want to see another bar. I want to see empty space. So same thing on the reverse side, right? So this inverted hammer up here, when I look to the left, it's empty space. So it's standing out by itself. That's what I want to see. And it's an area of value because we're saying, hey, we came to this supply zone. We can't sustain staying above the supply zone, right? So you get this inverted hammer, boom, you take it. But the 78.6, you say, hey, you know what? This could be an area where we struggle. And we did. Because at the end of Monday, look what happened. We could not go below 78.6. We really struggled. The next day we got down. So if you take this trade, here's a decision you have to make. You take this trade, your stop is right above this hammer because it's logical, right? There's nothing to the left where you go higher unless you go a few days out. So this makes sense. And your reward does not come until the next day, and we don't know that. We don't see it yet. So when you take this trade and you see at the end of the day that 78.6 holds as support, you have a decision to make. Do I keep my support? I mean my stop. Do I keep my stop and go for my 2, or do I exit this trade? Very small profit. Do I exit this trade? Right? Very big decision you have to make. Momentum is to the upside, right? Long term, when we look at the weekly, we're in downtrend, but the most recent momentum is to the upside, right? The very most recent week is to the upside. So based on this, the decision you make is, hey, so recently this is a very strong uptrend. Am I gonna go down, or do I just say, hey, you know what? I'm okay. This is a very small profit. Yes, this was my target. It didn't happen. At the end of the day, I'm okay with a 1-to-1 ratio and exiting. That's a decision you have to make. Or you say, you know what, it's okay. I've been making good trades. If I lose on this one, I'm okay. I'm gonna take a chance. Right. So I highly recommend don't do that on trades until you have winning trades in a row. Then you can say I can take this risk. Otherwise, I'd just say, hey, this is 78.6. This supply zone is acting as support, and price. It's like clockwork, right? It went right there and dead stop. Right? It said, I'm not going any lower. Of course, more banks in trouble. The next day, boom, it collapses. It's a nice move, but we don't know, right? We don't know, and we have what, a 7-to-1 ratio at the end of the day, right? This kind of move, you probably exit around this other fib level at 23.6 from another level. You probably stop somewhere there. You never get the full. If anybody tells you I got the full thing, like, they're lying to you. Like, I saw on Discord, one person said, hey, I entered at $1. It was a zero DTE trade, and I exited at 25. And I looked at the trades for that option. That 25 was the maximum that it shows, but there was no trade at that 25. Right? So just because the number pops up, you can't say, hey, that's my trade. The trade count has to go up at that number. So nobody will ever get the bottom or the top. Right? Somewhere in between is where you say, hey, you know what? I have this strategy, I'm exiting. And your last stop could be, hey, this two big moves down, and I'm going to move my stop slowly. Right? I move it above here, and then I move it above here, and then I move it above here, right? At every hour bar, because you're coming back at every hour, right? You can say, hey, this is where I put my stop. So that lines up with that 23.6 from fib level anyway. So you either exited earlier, or you kept moving your stop and saying, hey, maybe it's going to keep going down. And by this time, you should have less than 5% of your position anyway. Everything should have, right? 2-to-1, half off. And then every, one from there, you're taking some position off because you're getting some nice moves. But these are nice. Like, this is really nice move. Right, both of these are nice moves, but keep in mind, like, where could it stall? Once you see that, then boom. Yeah.
Sorry, was that a question?
No, just
Really?
just a statement.
Yeah.
Yeah,
See
makes
if
sense.
you have any questions. Questions?
No question for me.
We ready for this week's trade? I want to see
think
some
so.
trades. I want to see some trades.
Yeah.
I recommend you wake up early every morning. At least catch that what is happening at 6:30, right? When the market opens, what is happening, and then you can go
Yeah.
about your day. Like this day, when you wake up and you say, "Hey, I see this nice gap up," then you say, "Okay, this day maybe there's trade." Then you set your mind to watch it every hour. But some days you'll say, "Okay, I don't see anything." Then you can just skip that day. Like here, right? It's kind of like flat day here, so you can say, I don't see anything interesting. I'm not going to bother here. So that's why I say, get up early, look what the markets are doing at the opening, and then you can kind of plan out your day if you've done your homework the night before.
Yeah. Are you leaving tomorrow as is because of FOMC?
So I don't have any new positions. Any existing positions, I'll either close it in the morning or sometimes before FOMC, depending on what my day looks like meeting wise and stuff like that. But I don't like to have a position open while Powell speaks. So if it's already a losing position by the time he speaks, I might leave it, right? Because I'm saying, hey, might as well just go for the full stop. But usually I don't like to leave positions open, like short-term positions, like long-term positions. I don't mind.
Yeah. Okay. These regional banks are crazy.
I know. They're really going nuts. All right, let's call this a day, and we will resume again next week based on your trades.
Okay.
Sounds good.